We can start? Okay, wonderful. Good morning, everybody, and welcome to this webinar with fxstreet.com. On this webinar today, we're going to talk about, hi Ray, we're going to talk about support and resistance. Okay, now the reason I've decided to do the webinar on this is it's actually, well, one is very, very important. I truly believe that every trader needs to understand support and resistance, because regardless of the system that you're trading, this can help improve your profitability by one, obviously increasing your strike rates, and two, eliminating some of those trades that you really just don't need to be in. Okay? From all of the coaching that we do, one of the the most consistent piece of feedback that we get is that when we teach people about support and resistance and they understand to be disciplined and to remain patient, when they start looking at that, that's when their results change. Okay, so we have one lady who was struggling for a long time, and then we started to talk to her about the importance of discipline and just waiting for the very, very best setups. And those are the setups where you're taking it from an area on the chart that you're expecting something to happen. And when she started to do that, rather than take trades from literally anywhere on the chart, that's when her profitability started to improve. So this is a very, very important lesson for everybody here. Now, just before we get started, we need to do the normal disclaimer. So the content of this webinar is not for investment advice and should be used purely for educational purposes only. And what ultimately we're trying to say there is that we're going to give you some ideas, okay? They are good ideas, but you're still your own master, if you like. You still need to go away and do your own due diligence, and you need to decide whether it's right for you. So don't just, take what we say as gospel. Look at it, have a think about it, and I'm sure at the end of the day you'll come to the same conclusion that it's a very, very worthwhile tool to add to your trading arsenal. But never do something just because somebody else tells you, okay? And that goes for any area of your trading. Ultimately, if you're trading on other people's advice, then that's fantastic whilst they're profitable. But at the end of the day, if they fall off the face of the planet tomorrow, where are you going to be? You're going to be back to square one. Which is why everything that we do, everything that we teach is obviously, we're teaching you to be your own boss, to not rely on anybody else. So a little bit about myself before we start. I'm the co-founder of a website called Traders Corner. It's a website that I've started with my brother. We've been trading for about, must be going to 9 years now. 8-9 years. We've co-authored articles for FX Street, FX Journal, and various other publications and websites. We've also written a couple of manuals and a couple of books. And obviously we're trading coaches, so we also teach people how to trade. And if you want to reach us, you can reach out to us at our website or via our Facebook page, which you have the link there, or you can follow us on Twitter as well. So whichever way you feel, that's perfectly fine. Okay, so now on to the webinar. Support and resistance. What is it? Why do we use it? All of that good stuff. Well, first of all, it's the most basic yet effective form of technical analysis. Now, we're fortunate enough that we happen to know a lot of traders that trade for the banks. We personally don't. However, our family as well, they trade for some banks in Asia. So we know a lot of traders, and we know the sorts of tools that they use. And support and resistance, without fail, is one of the most important to them. Okay, they do use other tools. Some of them use indicators. Some of them use fundamentals. But at the end of the day, when it comes to trading decisions, support and resistance is very, very important. And the reason it's important is exactly what I've just said. Most market participants, the bigger players anyway, they acknowledge these levels in one way or another. All right? So they pay attention to these levels. And if they pay attention to these levels, then you really should too, because it almost becomes like a self-fulfilling prophecy, if you like. So what is support and what is resistance? Well, support is a level where the sellers find buyers. So if you imagine the price is coming down from, so if we look from the left to the right of our chart, it's on a downwards trend. It comes down to a level and it almost hits a floor. Okay, so it's been trending nicely down, and then suddenly it can't go any further, and it either hangs around or it bounces back up off of that level. that's a level where the sellers in the market have reached the buyers. Now what's ultimately happening is that, one, the sellers they don't have as much conviction about the downtrend as they previously did. And number two, the buyers are getting involved and they're saying, you know what, this looks like a good place to buy. So there's a few things going on there. There's also some profit taking and all of that kind of good stuff. But there's a few things going on at these levels. And conversely, resistance is a level where buyers find the sellers. So you've been in an upwards trend, and then suddenly the market gets to a point where it can go no further, and then it rebounds. It's like a ceiling, if you like, almost like a glass ceiling on the market. It's also important to understand that the bigger time frames are more important. The bigger time frames are more important. All right. So a weekly chart, the support and resistance levels are more important than those levels on a daily chart. Daily charts are more important than the levels on an hourly chart, and so on and so forth. Now, I'm not saying that you can't trade support and resistance on the shorter term time frames. We do. When we're day trading, I've got our lovely range charts up, but I also look at some time-based charts. So I'm quite happy to look at support and resistance level on a 5-minute or a 15-minute chart. That's not an issue. All I'm saying is that the bigger levels where you expect the bigger reaction to price occurs on the higher time frames. And we'll take a look at some of those charts later on. So why do we like support and resistance? Well, price reacts to these levels. And if price reacts to these levels, then some sort of movement can be anticipated. If you're taking a trade right in the middle of the chart with no support and resistance whatsoever, so it's just kind of hanging out there and you feel like taking an entry, why are you taking the entry? Because what? Because your technical indicators, maybe your MACD or something is signaling a buy signal, all of that kind of good stuff. Now, will that be profitable? Yes, I would assume so. Would you be more profitable if you were only to take the signals that occurred at a predefined level of support and resistance? I pretty much would bet my house on it. Okay? The reason for that is that you're not just trading, if you're trading your technical system, okay, so let's imagine you have a technical system which maybe uses, I don't know, MACD, some sort of moving average crossover or whatever. And let's say that system is profitable. But you take the system, you take the trade in the middle of the chart. So there's no, you're not taking a predefined level of support and resistance. So ultimately what you're doing is you're trading the statistical edge of your group of indicators. Now there's no guarantee that the rest of the market are looking at those indicators. So yes, you have an edge, I won't deny that. But then let's say that you start taking your signals from levels where the rest of the market are going to be looking to take the trade from at the same time. Don't you think that that gives you a better chance of, one, your trade surviving, and two, making a decent profit? Okay, because you're taking your signals for your proprietary system, whatever that is, from the big levels in the market where you can rely on the bigger players getting involved and pushing your trade in the right direction. Do you see what I mean? Do you guys follow me? Does that make sense so far? Yeah? Good stuff. Yeah, and we'll get to the live charts first of all. It's better, you need to know the theory before we even look at a live chart. So, the other thing with support and resistance is that they're ideal areas for entries and exits. Now, what do I mean by this? Well, first of all, as we said, price movement can be anticipated at these levels. So if you're in an upwards trend, you want to be looking to buy at support. But what is this about exits? Well, wouldn't you think that it might be a good idea to try and get some profit off the table before you were to hit resistance? Think about that for a minute. If support and resistance are levels which we accept as being levels where price reacts, where something's going to happen, and we're completely willing to buy from support in an uptrend, don't you think that if you can, it might be a good idea to take some off before you get to resistance? Because what's going to happen at resistance? One would assume that the markets may look to sell at resistance or at least take some profit. Okay? So the ideal areas for entries and exits. One very important concept that I want you guys to understand is that of previous support becomes resistance and previous resistance becomes support. The reason for this is that we're not just looking to trade the same level of support, all the well, we would, but in an uptrend you're not going to get to trade the same level of support. What would happen is an area of resistance, a previous area of resistance will then become an area where the market will look for support. And I'll show you examples of this on the chart in a minute. But just before we get to the chart, just keep that in mind. Previous support becomes resistance and previous resistance becomes support. It's a very, very powerful concept. And it's one that you need to wholeheartedly own and believe in. Okay, so one of two things are going to happen when price approaches support. We need to understand this because not all of our trades will be winners. So when price approaches support or resistance, it's going to do one of two things. First, it's going to reverse. There's a possibility it's going to reverse at that level. The second option is price is going to break through the level. Now, if it breaks through the level, you're going to need to expect momentum at that level, because if you don't get momentum at that level, then that's kind of telling you that the rest of the market aren't on board with that particular trade idea. Okay, because at these levels you have a lot of stops placed. So if the price manages to break through a level, it's then going to trigger a number of stops, which is then going to move the market on further. People that then trade breakouts will then look to get involved in the trade as well. So you have a whole heap of participants getting involved at that very moment in the market. So that's why you're expecting momentum in the markets at those points. Okay? Oops. So, what does support and resistance look like? Well, resistance, like this here, is an area where the market has come up, is found sort of like a ceiling, it's turned around, and it's reversed. Okay, that's resistance. The next time that the market came to this resistance level, it broke through with momentum. Fine, wonderful. So what happens? Remember I said previous resistance becomes support, previous support becomes resistance. Well, you're expecting the next time price comes to this level, it's going to find some support. If the uptrend is going to be held in place, then this would be a great area for the rest of the buyers to get involved and say, I want to take another bite of the cherry and I want to make money like I did on this previous move here. I want to do it again. So when price comes back to those levels, you're expecting price to react. Okay, so it comes back to this level. You got resistance, support, resistance. What's this? Previous support, previous resistance becomes support. Okay, so you come up here to a level of resistance, comes back down, it finds support, it rallies on up, finds resistance, comes back down, finds support. That support is a previous area of resistance, and then it rallies off from there. And that is previous resistance becomes support. So us as traders, myself and my brother, we like trading swings within a trend. So this is absolute bread and butter to us. We love these sorts of setups here. So basically we like to see a strong trend in place. We like to see a nice defined area of resistance. If we're in an uptrend, we like to see the market break through that level. And then we want to see the market come back to that level and for the level to hold. We don't want to see the market crash through it. Okay, now I'm not saying it has to be pip perfect. It's the FX market. It's never going to be pip perfect. So can you have the wicks breaking through these levels? Yeah, sure, not a problem. We're looking for the area. Okay? We're not looking for a pip perfect level. If the price comes back to that sort of area, then you're happy enough to take the trade. And this is what it looks like on an actual chart. And we'll go to live charts in a minute. But this kind of, the reason that I love this chart is that it just shows it so well. And it's also something that we traded with our members throughout when was that, 2011. So that's pretty much the entire year. This was a chart that we were looking at all along, and it goes further back than this as well. So you can see that this was an area of support. The price rallies on up, breaks through it, treats it as a bit of resistance before it sells off from it. The market then pulls back to that level. Look at that. Back to the level. and then decides to sell off from it again. Comes back to that support level, finds a bit of support, crashes through. It pulls back. Where does it pull back to? You can't make this up, guys. You cannot make this up. This isn't a coincidence here. Look at where it pulls back to. Previous level of support becomes resistance. And then it breaks through, sells off. Where does it come back to? Previous level of support becomes resistance, sells off from it, comes back to it. Previous level of support over there, resistance, resistance again, sells through it, comes back to this previous level of support here, briefly treats it as resistance, massive sell-off, interbank intervention over here. Okay, so sorry, interbank, central bank intervention here. So this one, the ECB came out and ultimately said, you know what, good luck, we're going to put a floor under it. This is what happened. Massive, massive movement there. The market then comes back to that level, and guess what? It finds resistance there again. Can you really make this up? Let's be honest about this. This is what happens live in the markets. Now, could you have been trading through these little periods here? Yep. Yes, you could have been trading through those candles there, but why? Why not just be disciplined? Why not wait for perfect setups like these? Look for these setups and take the trades from these setups here. Are they going to occur every day? Absolutely not. No, they won't occur every day. Will they occur enough for you to be able to make a profit? Yes. Yes, they will. And you know what? You'll stop treading water, you'll stop hovering around break even, and you'll start to actually make money in your trading if you pay attention to these sorts of concepts here. Ray, when we sell at resistance, we select our targets. Either we look to get some off before you get to the next. So if we sold up here, we'd look to be taking some money off before we got down to the support level here. Okay, or you can look at like Fibonacci extensions. There's different ways that you can take profits. But we like to, for the most part, we like to take at least a little bit of the money off when we get to a support level or a resistance level. Anil, looks, yeah, we'll come to live charts in a minute, Anil. But here's the key, okay? And I know where you're going with this, but here's the key. It looks nice when the chart is trending, but what happens when it's consolidating? Don't trade it. Leave it. Only wait until you have a chart that looks like this. Why would you do anything else? There's no need to. The only reason you'd want to be in a trade that doesn't look like that doesn't have a trend that looks like this, or similar to this, is because you want to be in a trade for an adrenaline rush. Exactly, Ray. That's the only reason you're in it, no other reason. If you can't see a chart that makes sense to you like this, don't take the trade. You know, so like with the euro, if it isn't quite looking as pretty as it could be, no one's forcing you to take a trade in that particular pair. Look for another pair. If you can't find it on one of the FX pairs, look at a different time frame. If you can't find it on a different time frame, look at a commodity, look at a stock. The concept here of support and resistance works on everything. So FX, commodities, interest rates, stocks, any financial instrument, anything that moves, you can use this here. A 2,000 pip wedge in euros trading for adrenaline. Yes. If you can't see a pattern on it, Anil, then yeah. If it isn't clear to you, it's trading for adrenaline. So we're looking for, us personally as traders, you know, look, let me put it to you like this, right? Throughout the beginning of this year, from a longer term perspective, through January and February, I must have had maybe, I don't know, 20, 30 setups. I got to March, and through March and April, I pretty much didn't take one trade from a longer term perspective. I then took a couple of trades in May, and the charts are setting up again now. But there was a couple of months there where I didn't take anything from a longer term perspective because there's nothing to trade. There wasn't anything that jumped out of the screen at me and said, you know what, I'm over here, take the trade. There's, you know, not that there's no risk, but this is the best setup that you're going to get. Does that make sense to you? I'm not trying to be harsh here, guys. I'm really trying to instill in you the type of mindset that you need to have to be successful as a trader. Okay, I need you to come away from you know, the normal way that a rookie trader thinks. And I want you to come into the mindset of a professional trader. And I'm really, really sorry if it sounds harsh. I don't mean to be harsh here. I'm just trying to, like I said, get the message across to you. Longer term, Gabriel, is looking at things like daily charts and 4-hour charts, if you like. So mid to long term. Okay, I mean, from my perspective, I also use the range chart, so the 45 range chart. That's my entry chart. So, we move on. So we can use them for entries, exits, and take profits. So how do we do that? Well, there's 4 ways, in my opinion, to enter. If you're not going to use, we use range charts, so there are other ways that we enter the markets. But let's just assume that you're going to use the standard time-based charts that are available to everyone. There are 4 ways that you can enter. There are things called 1, 2, 3 reversal patterns. Now, before I go into this, just so you know, I can't show you guys these setups in this particular webinar because we won't have time. That's a different webinar altogether. But I'm just giving you some ideas, okay? So one question here. Have I found better results being that selective on your trading? Yes, 100%, Gabriel. 100%. Do I enter off a break of an MA? No. No, I don't. We've got different ways to enter, but as I said, there's a couple of ways that you can enter here if you're just trading time-based charts. Something called a 1, 2, 3 reversal. So it's when the market comes up and let's say we're in a downtrend and we're looking for a pullback, we're looking to get back involved in the downtrend. So the pullback is to the upside to a level of resistance. The market would come up, it would make like a high, it would make a low, it would then make a lower high, and then it would then make a lower low and break through that. Okay? You've got candlestick reversal patterns, so dojis, shooting stars, hammers, engulfing patterns, they're all good ones. And then you have counter trend line breaks, so you can put a simple counter trend line along there and wait until the price breaks that trend line, and once it breaks the trend line, get involved in the trade like that. Or you can use a combination of above. Okay? You can use a combination of all of those if you like. You mean a bounce. Do I take a trade off a bounce? Yeah, I don't mind, but I need price action, Ray, to back that up. So if you're going to trade a bounce off of an MA and price is reacting and behaving nicely and harmonically, you still want to use an entry technique. Don't just trade it because price is approaching the MA. Okay? Anil, yes, Anil, I promise you I will come to that in a second. Okay, we will get to live charts and we'll show you that stuff in a minute. Candlestick patterns, counter trend line breaks, or a combination of the above. Stop losses. Generally, you want to be placing your stop losses behind the most logical points. Okay, and ultimately, even though I note the 3 here, they're all the same difference, which is behind the most recent support or resistance level. Because if you place it behind the support and resistance level, you've got the backup from the market. So if something, maybe you get an entry, you mistime an entry a little bit, you've still got that little saving grace that the rest of the market are on your side, so they may be able to push it in your direction. Yes, Gil. You put it where everybody else does. And I know you're going to say, but what about stop hunting and stuff like that? Well, if you've got the right setup, if you pick the right level and the rest of the market are with you, then you should be safe. If you don't, then everybody will get stopped out at the same time. Remember, the FX market is a very, very large market. There's a lot of liquidity in there. So it's not, you're not just going to be able to get your brokers running your stops. I know a lot of conspiracy theorists believe that, but in my opinion, that hasn't really affected me. I don't really see that as being an issue. I kind of just see that as more of an excuse. If you get stopped out, you get stopped out. There's kind of nothing you can do about it. But from my perspective, I want to be out of the market as soon as my setup is no longer valid. And from my perspective, the setup isn't valid once the market start to make higher highs and all of that kind of good stuff. Do you only trade on the higher time frames? No, we also trade lower time frames as well. We don't have a problem with that. So take profits, a little bit more difficult. Even I struggle with them from time to time, so they are a little bit more difficult, but they're kind of more discretionary. But what I would recommend to you guys is that you want to try and exit part of your positions before the next support or resistance point. We want to be able to make money from the markets without the markets having to do anything spectacular, if we can. So if we can get in, if we can buy support in an uptrend, and we can take some money off the table before you get to the next resistance point, you're not even asking for the markets to make a higher high. Yeah? You're just asking for the markets to do what they did a few periods ago. So if you're on a daily chart, you're asking the markets to attempt to get to the highs that it achieved, last week or the week before. That's all. You're not asking them to break the highs. You're not asking them to do anything like that. Just literally get towards where it was in the past. Does that make sense to you guys? And obviously, it's nice to have a good risk reward. So if you can, then have a positive risk reward there. Now, you need to remember that with a positive risk reward, there's a direct correlation there, or inverse correlation. So the higher your risk reward, the lower your strike rate is going to be. Okay, but your profitability will also go up. But then having said that, you need to do something that works for you. So that means that if taking a lower risk reward but having a higher strike rate means that you're a better trader, then please do that. Is it not better to move to break even and wait the longer term you get better? Well, yes and no, Gabriel. The problem of moving your stop to break even too early is it can take you out and then roar off in your direction. So yeah, you can do that by all means, but it's not always the best approach. Okay? Does that make sense to you guys? My chart. Just get the charts up now. Does that make sense to everybody? Yep. Pam, we don't really predict direction, to be honest, but we do trade in the direction of the trend. So, for example, this here, you can see that this is an uptrend. There's really nothing else here. This has to be an uptrend. So this is a weekly chart. Okay, so we'll go through time just so you can see that it works forever. So when are we looking at here? 1999 to 2005. Imagine that. 1999 to 2005, and these concepts are still working. So let's just go in here and put some support and resistance levels in. Okay, so this is a resistance level here. Market found resistance, came down, came up, sold off from it. Resistance level here. Market didn't pay any attention to it, but that's not a problem. Not everything's going to work out. What about here? Cast our minds left. Look at that. Support becomes resistance. What is that? Resistance over there. So this is 2004. This here is 1998. 97, 98. A level from 98 comes back into play in 2004, 2003 type time. What about here? Market finds resistance, comes back, finds support, resistance breaks through, comes back, finds support. I know, I will, because I have the weekly trend up, I'll bring a 4-hour chart up in the moment. Is that okay with you? Need to draw the support and resistance on trading time frame. It's up to you. You can do it on both names. It's really not an issue. But okay, let me get rid of this. Let me go to a daily chart for now. Okay. Give me a second here. Okay, so let's look at this daily chart for a no. Okay, over here, can we see support and resistance? Yes. What would you do with it? Nothing on this chart. There's support. There's resistance. There's support. So we can see here, market has treated this as support. It's broke through. Do you remember earlier I said it needs to break through with momentum? If it doesn't break through with momentum, then something's wrong. Do you guys recall that earlier on in the webinar? So take a look at this. This is what you call a failure trade. So basically, the charts came down to this level. They failed to get below. Well, it got below, but there wasn't any momentum. Momentum, the way I would judge momentum is you want big full body candles. So a candle like this guy over here, that's a momentum candle. When price broke through here, you're looking for it to make a move down to kind of these levels here. When it doesn't, and it kind of goes down and then it starts to trickle back up, that's a clue that the market's saying to you that ultimately, yeah, exactly, the market's saying to you, you know what, you should have gone down, you haven't, so the likelihood is you're going to continue going back up. Does that make sense? So from a technical perspective, if everybody was believing this level here, as soon as it broke through that level, maybe it hovered around for a little bit, but it should have then broken down here. The fact that it broke back up is a clue that the market wants to continue going higher. So at the moment here, you have this massive momentum move for this candle here. We would be expecting more momentum to the upside. But when the market got above there, it went from 08, it then dropped 70 points after getting above that high. So really, we don't want the market, if the market comes back below here and starts to close below here, then that's a clue to us that actually, possibly we don't want to be involved in that trade there. Will I take the 35 area as the next resistance? This area, the 35, let's take a look. Yeah, that's a good resistance level. Let's put that in there. That's definitely something you want to keep an eye on. But look at where, if we cast our minds here, this level of resistance here, that's what the market's reacting to at the moment. So hopefully we don't get that kind of reaction again. Is a fib level can be considered for horizontal? Yeah. Fib levels can definitely be considered, 100%. I wouldn't use a fib on its own. I wouldn't use it in isolation though. I would use it in conjunction with these types of support and resistance level. Damn the NFP. Yeah. The yen, yep, the yen pairs are doing well. Should we take a look at that? Now remember guys, that nothing is set in stone, okay? There isn't going to be anything that is 100% in the markets, and you need to fundamentally believe that. You need to understand that. One question. How many points would you consider? Just one's enough, to be honest with you, because you've got to remember the previous resistance becomes support. So this area here, the one that we're at right now on the yen is actually quite an important area. That 96.00 level is the area where this kind of zone in fact. So around the 95 to 96. This sort of area here, if the market is going to turn around, this would be a great place for it to do it, because this massive momentum move to the upside over there, that was capped. Okay, that was capped there by these levels. We've then since had like an 800 pip drop in the yen from that point. So that's a big drop. Now, if the markets are going to turn around, this would be a great place for it to do it. And this is why we need to keep our eye on this level. Can I take a look at the pound CAD 4 hour? Okay, no problem. Pound CAD 4 hour charts. 4 hour chart. Load, damn it, load. There we go. You're long. Very nice. I've been trying to get long this for a while. Okay. Where are we looking at? You're long on 59.02. Okay, what was the reason that you got long there? Because of the support point? How do you toggle between the main terminal charts and NinjaTrader? You use a market analyzer window. And so I've got this guy here. So I can just click which one I want. So pound, dollar, for example. It takes a little time to load, but that's how you click through them. Okay. Okay, so Gabriel, you got an engulfing. Okay. That's not a problem, that's a good one. From my personal perspective, I can't really see an entry here, but that doesn't mean to say that your entry wasn't correct. But you're definitely, you're in an uptrend there. It's a very, very bullish market, so you want to be long, if anything. We might get a little bit of a pullback, but you know what, to be honest, it's actually due a pullback in any case. So yeah, not too bad. Are there any questions at all? The pound Aussie. And support and resistance as well, by the way. You can use trend lines for support and resistance. You know, so one of the trades that we took was on the pound Aussie. It was probably this one here, I think. One of these, anyway. But if you take a look there, look at the way that the price reacts with this level. Not pit perfect, fair enough, but seriously. Seriously. Have a look at that. Can you make it up? When the markets are the perfect trading chart, indeed. And Ray, the thing with this is that they don't turn up all the time. So this only started to manifest towards the beginning of May. So remember I said to you that throughout March and April I didn't really do much. It's because of this crap here. For me, there's nothing for me on that chart. Nothing for me to do. Start to get into May and the markets start to trend. Patience, wonderful. Remain disciplined, get involved and make some money. So S&R is said to be zones rather than levels. I agree with that, Anis. As I said to you, it's not, you can't do it pit perfect levels. It doesn't work like that. Support and resistance zones, so this kind of area, if it reacts in that sort of area, I'm quite happy. So the fact that the market broke through this particular trend line, not bothered. As long as it respects it and I can see the market reacting to a level, I'm happy enough to trade it. Do I combine MAs with support and resistance? Yes, I do indeed. In fact, what I will do, let me bring up one of the charts that I trade, because I trade some range charts as well, so I'll show you how I use that. So this is that pound Aussie chart. And look, I have the moving averages there, so when this started to break out, you can see where we've been taking our trades. Look. So previous resistance becomes support. That was a great trade off the top of there. You got the trend line in there. You've got it reacting nicely with the moving averages, and just look at that. Wonderful. At the moment, I'm waiting for a pullback. A little bit more than that. I feel like it's gone a long way, so I'd like it to come back to this sort of level here, then give me a long. But these are the sorts of charts that we like to trade. When you don't have anything in the market, when you don't have momentum in the market, no one's forcing you to take the trade. You don't need to be trading during this stuff here. There's no need for it. You can trade through that. Nice momentum move to the downside, pull back, get involved. Momentum to the downside, pull back, have a sell there. You see what I mean? Wait for the ones that jump out at you. The ones that you've got no option but to take them because they're just so lovely, beautiful. Aussie yen on the daily. Okie dokie, give me a second. Heaven on a stick. Indeed, Ray. You love this, don't you? Absolutely love that chart. Okay, let's go back. So what were we looking for here? Aussie yen, someone said. Have I missed anybody else out? I'll scroll up in a second. I use a kinetic data feed, Annie's. Was there anybody else? Aussie yen, pound dollar. We'll quickly do the pound dollar, then we'll look at the Aussie yen. Okay, this is the 4-hour chart. Definitely bullish. We're up at this resistance level here, so I'd keep an eye on that. Would be looking for a bit of a pullback. However, should we take a look at the daily chart on that? From a daily perspective, really, we're still in a downtrend. If this breaks here and it holds above, then we could say that we're changing to an uptrend, but from that massive downwards movement there, this is pretty much just a pullback at the moment. So we've got to be careful on that one. Aussie yen, Aussie yen, Aussie yen, Aussie, there we go. Sorry, Annie's, what were you saying? Broker, data feed is kinetic. The Aussie yen, again, this is a tough one. This really could fall through the toilet. But looking at this level here, if it continues below this level, what you'd like to see is some sort of a pullback to that level, and then you can sell off from it. If you start getting a pullback here, the level you want to keep in mind is this one over there. So if we get a pullback from here, expect resistance at the 97.06. Nice. The 88 level. 91.20 is good support area for that, or 89. 91.20. Can't see. On the chart right now, 88.57 really looks like the. Oh wait, hold on, we've got this guy over here. 90, round number as well. They're the sorts of levels I'd be looking at the moment. You shorted from 94.20. I like that. Very, very nice. Good trade. So, we're kind of coming to our allotted time. Does anybody have any questions at all? Has this been useful to you? Would you close the position on the pound CAD because of the NFP? If you weren't in much profit, yeah. If you're in a whole heap of profit and you don't mind giving some back, maybe just move the stop a little closer. It depends on the position. Okay. Well, you've got to decide where it is in comparison to your risk, Gabriel. Which one do I give more attention? Support and resistance or a trend line? Support and resistance. No, I wouldn't take a trade now with NFP a couple of hours away. Wouldn't do that. Okay then, guys. Well, thank you very much for joining. You are most welcome. Happy weekend to you as well. Thank you, FX Street, for having us, for having me, and for putting this on. We'll be doing this again in 2 weeks' time, I believe. So hopefully you'll be able to join us then. And yeah, if you've got any questions, send us an email or something. But thank you very, very much. You're welcome, Anil. Sorry if it sounded a bit harsh when I was talking to you about discipline and all of that, but I promise you it's just for your own benefit. Okay? Oh, different Anil. But anyway, thank you, as I said, thank you very, very much for joining. I appreciate it. If you have any questions, drop us an email, and we will speak to you all very, very soon. Oh, you didn't get did you email me? The next one we put on then, did you? Okay, I can only apologize. Send us another email though, and we'll hook you up, alright? Okay then guys, take care now, and I'll speak to you all in 2 weeks' time. Okay? Thank you very much, and good day and good night. Good trading.